Hello students, welcome to CR Digital Classes. I'm Hashim Ali Khan. So this platform of CR Digital Classes will provide a number of videos on different subjects. By watching these videos, definitely you can get a lot of confidence on your subject and you can excel in your examination. Now in this present video, I'm going to explain you about the normal loss and abnormal loss. How to treat the normal and abnormal loss in the accounts of the consignor. Now, before that, first of all, you must know the meaning of the term normal loss and abnormal loss and what are the differences between these two. Then we'll solve one problem also. In examination, you may get a theory question, small theory question like what is normal loss, what is abnormal loss, what are the difference, or you may get a short problem also. Apart from that, this knowledge is very necessary for attempting the essay type problem where you need to calculate the value of unsold stock by considering this normal loss and abnormal loss. So let's begin our discussion on the concept of normal loss and abnormal loss. When goods are sent by the consignor to consignee, then sometimes it will happen during the transit or during the processing of sale, some goods are lost. That is called loss in consignment. And this loss may be expected or it is unexpected. Now, first of all, we categorize the losses into two types called normal loss and abnormal loss. We'll try to understand the meaning of the term normal loss. This is the loss that occurs naturally and expected during the normal course of the business. In other words, we can say expected loss is a normal loss. So at the time of sending the goods, the consignor knows in advance that this loss, some loss is inevitable. Example, while loading or unloading, some wastage will be done. Some evaporation, shrinkage will be done, and this is expected. So this type of loss is called normal loss. Example of normal loss are you can see shrinkage or evaporation. These are the examples expected, and such losses are usually borne by the consignor. Whatever be the loss, it is a loss to be borne by the owner. Owner is the consignor, and their value is not separately accounted for, but overall stock is adjusted accordingly. One very important point to be remembered: the valuation of normal loss will not be calculated. The value of normal loss will be adjusted in calculating the unsold stock. That point you have to remember. Separate calculation for normal loss, not required. Now, how to calculate the value of stock on consignment? If there is some loss, then value of goods consigned divided by actual quantity received into unsold goods. We want to calculate the value of unsold goods. So in that case, value of stock will be calculated by this formula. That means after considering the normal loss, value of goods consigned is equal to value of goods sent on consignment plus consignor's expenses. Direct expense incurred by the consignor, that is the value of goods consigned. Actual quantity received by the consignee. So from this quantity sent by the consignee, then minus normal loss of quantity. This will give you actual quantity received by consignor. So actual quantity sent by consignor, it is not consignee, it is consignor, minus normal loss. Then unsold goods or quantity. Quantity received by the consignee minus quantity sold by the consignee. This will give you unsold quantity. By using these three, we can calculate value of stock on consignment. Here in this case, normal loss is adjusted in calculating the value of goods unsold. Example. One example is also given. Consider the following information. By understanding this example, the concept will be clear regarding normal loss. The goods sent on consignment 100 units. 100 units at 95 per unit. So 9,500 is the cost price of goods sent. Normal loss 5 units due to evaporation, handling, etc. So the consignee receives only 95 units. So it is expected at the time of sending the goods, consignor expect that 5 units will be lost. So actual units received by consignee 95. If 60 units are sold, then the remaining 35 units out of 95,000 received, 60,000 units are sold. So unsold units are 35 units. Now the value of unsold stock will be calculated as follows. So here 9,500 is the total cost of 100 units. Total cost of 100 units. But how many units are actually received by the consignee? 95 units. 5 units are lost. So 9,500 divided by 95 into how many units are remaining in unsold stock? 35 units into 35. So it comes to 3,500. So ultimately, the value of unsold stock is 3,500 after considering normal loss. This is the method of adjusting normal loss in unsold stock. Separate calculation of normal loss not required. Now, in this example, the value of unsold stock is 3,500, right? Now, the normal loss results in the cost price per unit being adjusted as the total cost is spread over reduced 95 units rather than 100 units. This calculation helps in determining accurate story. Over. This is the complete explanation regarding normal loss. Now I am coming to the next topic, that is abnormal loss. The loss which is unexpected. It is not expected. All of a sudden the loss occurred. This is an unexpected loss due to events like theft or accident or fire. Abnormal loss is calculated and recorded separately. This is the new point. Normal loss is not calculated separately. Abnormal loss is separately calculated. We have to find out the value of abnormal loss, and corresponding journal entries have to be passed for abnormal loss. So recorded separately, and consignor bears the cost. The value of abnormal loss is deducted from the consignor's account, and compensation may be sought if insurance covers such loss. If the loss is covered under insurance, the consignor may get some amount from insurance company. It is if it is covered. Otherwise, if it is not covered, the entire loss is the loss of the consignor. Now, first of all, journal entry for abnormal loss. So, journal entry, first journal entry is abnormal loss account debtor to consignment. Already I have explained these entries in the previous videos also. Again, I repeat, abnormal loss should be debited and consignment should be credited. With the value of abnormal loss, we have to calculate the value of abnormal loss before passing these entries. Now, secondly, when claiming insurance or receiving compensation, suppose if the loss is covered by insurance policy, then the consignor will get some amount from the insurance company. The entry will be insurance claim account debtor or bank account debtor to abnormal loss account. So first entry, abnormal loss was debited. Second entry, abnormal loss account should be credited. Debit should be given to either bank or insurance company. If the amount is received, bank account debit. If the amount is not received but claim is settled, then insurance claim should be debited. Insurance company should be debited. Now, for the portion of loss not covered by insurance. For example, if the abnormal loss value is 10,000, but the insurance company has agreed to pay 8,000. So remaining 2,000 is the net loss on abnormal. In that case, that net loss will be transferred to profit and loss account. Entry will be profit and loss account debtor to abnormal loss account. Profit and loss account debtor to abnormal loss. That's all. These are the journal entries. So what I have explained so far. So far I have explained you regarding the terms normal loss and abnormal loss. Hope the concept is completely clear to you. Now, differences between normal loss and abnormal loss. A question may be asked in examination. So here, on different basis, we classify. First of all, we classify on the basis of nature. What is the nature of normal loss and what is the nature of abnormal loss? The normal loss is unavoidable due to the inherent nature of the goods. The goods may be evaporated. The goods may be wasted due to loading, unloading. The goods may shrink. So these are the possible causes due to the inherent nature, and that is abnormal loss. But abnormal loss, it is avoidable and occurs due to unexpected events. Due to unexpected events like fire, accident, theft. These are unexpected. So on account of these unexpected events, the loss may occur. That is the abnormal loss. Secondly, occurrence. It occurs under normal conditions during the regular course of the business. Normal course of the business, this loss will occur. So there is no special conditions, but it arises from exceptional, unpredictable circumstances like fire occurred or accident occurred. It is unpredictable. The next one is valuation. In case of normal loss, there is no separate calculation for normal loss, but the value of normal loss will be adjusted while calculating the value of unsold stock. Whereas in case of abnormal loss, separate calculations we need to be made for value of abnormal loss. Next comes responsibility. No one is held responsibility as it is expected, unavoidable. So no one is held responsible. According to the nature, this loss will happen. Then responsibility may be assigned, especially if negligence is involved in case of abnormal loss. Next one is control. It cannot be controlled. This normal loss cannot be controlled due to the inherent nature of the goods. But abnormal loss, it can be controlled or minimized by taking some precautionary measures or by taking an insurance policy also. It can be controlled. Next one is accounting treatment. Now, accounting treatment, it is included in the cost without separate journal entry. No separate journal entry is required, no calculations are required. Simply it should be considered while calculating the value of unsold stock. Whereas it requires separate journal entry. For abnormal loss, we have to calculate the value, we have to pass separate journal entries. Next one, effect on costing. By incorporating this normal loss, the cost of unsold stock will increase. The cost of unsold stock will increase. That is the effect of normal loss. But according for abnormal loss, the cost will not be affected. That's it. So these are the differences between normal loss and abnormal loss. Now in examination, you may be asked a small problem on calculating the value of normal loss or abnormal loss, but in main problem, essay type problems, you must have the understanding of this. Without understanding the how to calculate the value of abnormal loss, you cannot pass the journal entries. So here I have taken one small problem in calculating the value of abnormal loss. Now, the problem goes like this. Ramesh of Nagpur consigned goods of 200 tons at 1,000 each ton to Raju of Bangalore after including 25% on cost to be sold at invoice price. So Ramesh is the consigner, Raju is the consignee. The goods are 200 tons at 1,000 per ton, but invoiced at 25% above cost. Now, his expenses was 4,000 and 6,000 for transport and insurance. Who is paying this? The consigner. And consigner, whatever pays, that is direct expense only, non-recurring expenses. Now, 20 tons were spoiled during transit. Insurance company accepted a claim of 12,000. Raju's account sale was stated below. So in the transit, 20 tons out of total of 200 tons. Out of 200 tons, 20 tons are lost. And it was already insured. An insurance company has agreed the claim for 12,000. Now Raju's accountant. Raju is the consignee. The consignee has sent the account sales. What the account sales says, 160 tons sold at invoice price. Actually, how many tons he has received? Out of 200 tons, 20 tons are lost in transit. Lost in transit. Right? So out of 200, 20 are lost. So 200 minus 20, 180. So 180 tons received. Out of 180, he has sold 160 tons at invoice price. Normal loss occurred, 2 tons damaged. Then the expenses and commission of consignee are 5,000 and 3% on sale, and 18 tons are with the consignee. Find the abnormal and normal loss. So here we have to find out the value of abnormal loss, right? So how many tons were lost? 20 tons. So here I am writing valuation of abnormal loss. Valuation of abnormal loss. How many tons were lost? 20 tons. So here cost price. Cost price of 20 tons lost. So here 20 tons into what is the cost price per ton? The cost price per ton is 1,000. So 1,000 into 20, it comes to 20,000. This is the cost price. Add proportionate direct expenses. Proportionate direct expenses incurred by the consignor. So consignor has spent how much expenditure? 4,000 and 6,000 transport and insurance. 4,000 plus 6,000, 10,000. 10,000 is the total expenditure incurred on all the goods. How many units he has sent? 200 tons he has sent. How many tons are lost in transit? 20. So 20 out of 200. We need for 20 tons out of 200, total 200 tons. So 10,000 into 20 divided by 200. It comes to 1,000. So 21,000. This is the value of abnormal loss. Now, out of this value, some amount is receivable from insurance company, 12,000. So, value of abnormal loss is equal to 21,000 minus claim, insurance claim settled. Insurance claim settled. How much insurance claim is settled? 12,000. So 21,000 minus 12,000 is 9,000. This is the net loss. It will be transferred to profit and loss account. So in this method, we have to calculate the value of abnormal loss. But normal loss, we will not find out the value. The normal loss will be adjusted while calculating the unsold stock. While calculating the unsold stock, that will be considered, but separately we will not calculate. In examination, this type of question, if it is asked, then you should write down this complete procedure, how to calculate. Then you should give a note that normal loss will not be separately calculated. Its value is adjusted while calculating the value of unsold stock. Hope the concept is clear. So in this video, I have explained you the concept, the meaning of normal loss, abnormal loss, how it is treated, what are the differences, and one problem also I have explained you about this calculation of normal loss. Now, in examination, frequently asked question will be like this: what is normal loss, what is abnormal loss, or differences between normal loss and abnormal loss. The short question may be expected in examination from this topic. Hope everything is clear. So we'll continue in the next class regarding the other aspects. All the best.